Yes, it was interesting. We gapped down and we had a trend from the open bear trend, but the bears could not get follow through. We ended up going sideways. We had a higher low major trend reversal. And now the bulls are trying to get a reversal up. So bear trend, trading range, instead of trend resumption down, the bulls are trying to get trend reversal up. They were unable to gap above yesterday's high. If they did, yesterday would have been a one-day island top. This is a big enough, big up, big down move to generate confusion. I mentioned last week that if we sold off down here and bounce, we could form a head and shoulders top on the 60-minute chart. Left shoulder, head, and right shoulder. That would be a lower high major trend reversal. The gap below Friday's low is the next target, and it corresponds to the left shoulder. If we do rally today or tomorrow up to that level, probably sellers there, around a 50% pullback testing Friday's low and around this price where we turned down last week. Big up, big down, big confusion, probably sideways. The bulls have a double bottom. The bears will try to get a head and shoulders top because the daily, weekly, and monthly charts are historically overbought. They've never been this extremely overbought. I think the odds are we've begun a pullback. A 5% pullback from the high is 2750, which is around the close of last year and the bottom of this buy climax. It's also around a 50% pullback from the entire rally. And most importantly, the weekly moving average is rising. And if we do get down here, we'll finally get a touch of the moving average, weekly moving average. Might take a few weeks to get there, but I think that's where we're headed. Even if this is an inside week and we break above it next week, I think the breakout will fail, and we've probably begun the process of going sideways to down. Yesterday we had a bull bar in the open, and then second bar led to a trend down. We had a triangle at the end of yesterday, lower highs, higher lows, after a sell-off, and the bulls are trying to create an early low of the day. They first want to get above yesterday's high, 60-minute moving average, and then close the gap. I thought yesterday never went always in short after bar 13. We had 3 sell-offs, but we kept forming higher lows, and we kept getting pretty good reversals up from the sell-offs. And now we're gapping up, and so far we have a bull bar, so I think we are still always in long. The bears want the market to top out at yesterday's high, but I said I think we're going higher. I think we're going to form a head and shoulders top, left shoulder, head, right shoulder. Therefore, we might rally for a measured move. I think we'll probably close this gap, maybe even today. Maybe go up for a measured move based on the height of the triangle. You initially look at the final legs of the triangle for the measured move, and if it gets beyond that, then you look at the entire triangle. So we have a double top, a neckline, and we're getting a bull breakout, so that would be one measured move, and then next measured move based upon that, and then finally a measured move based upon yesterday's range if we keep going above targets. Pretty close to resistance, 60-minute moving average, yesterday's high. Lowers the probability that we're going a lot higher, but we're always in long. And traders know the context is good. The bull bar so far is good. 25% chance we've already seen the low of the day. And that means a lot of traders are willing to buy here and take a chance. Right now, their initial risk is here, but their actual risk may only be a few ticks. So the math is okay. But look where we are. We're at the top of a trading range. And yesterday, every time we went up, and 4 times, 1, 2, 3, 4, we went down, and now we're at the top of the range. So, I personally did, first of all, I'm talking. I may have bought at the market as it was going up if I were not talking. But I would like to see a follow-through bar. Yesterday, first bar, good bull bar, but terrible follow-through. And we're at resistance, yesterday's high 60-minute moving average. 3 minutes into the bar, and so far the bulls do not have a big follow-through bar. I think we'll get above yesterday's high, but I don't know if this will be a trend from the open by the close bull trend. We need consecutive big bull bars. For the bears, they need a reversal to sell. They're not going to sell below 2 if 2 is a bull bar. That triggers a high 1 buy on the daily chart, bull trend, a pullback, and we're going above the high. But yesterday's a bear bar. This was a bear bar, not a strong buy for a big bull trend. Daily chart, big up, big down, probably big confusion, and probably sellers somewhere below Friday's high. The minimum the bulls want is no bear body. Even if it's a doji body, a doji bar, that they would consider it bullish. But the location is bad. We're right at yesterday's high. The bears are trying to get a failed breakout above yesterday's high. And we're right at the 60-minute moving average resistance. When the market is testing resistance, the bulls do not want it to hesitate. They want a big bull trend bar closing far above. All right, so the bulls did the minimum. They got the absence of a bear bar. They have a small bull body. So that reaffirms always in long. But a big tail at resistance will make a lot of bulls hesitate to buy the market and buy the close. You can see the 3 close is above the, the 3 open is above the 2 close. That tells you that as soon as traders saw the bull body, they bought the market. But the location is, I think, bad. If it trades below 2, what's the chance that it's the high of the day? Any reversal on the open can be the high or low. That would not be a very credible one. Maybe 20% chance. While in terms of absolute points, yesterday was a big day, 20 points. Relative to what the market has been doing lately, it's not especially big. And therefore, it's not impossible to trade upside down, trade above yesterday's high, and then go below yesterday's low. It's not likely, but that's certainly something traders will consider if we start to reverse down strongly here. Traders do not like the hesitation at resistance. You can see there are not a lot of bulls buying here. The bull body on 2 is enough to make bears hesitate to sell. If 3 is a bear body closing on its low, traders will be more willing to sell. Consecutive bull bars, even if 3 is a bear body closing on its low, there are probably buyers below 2. The bears need this, a big bear bar, preferably consecutive bear bars, to make traders think we're going to go lower. Markets deciding is it going to rally for a measured move up based upon yesterday's range or reverse down and test yesterday's close and yesterday's low. Traders are looking for consecutive strong trend bars up or down. Bar 1 is good, but bar 2 is not very good, especially given the location. I think we're still always in long, and the bears need at least 2 or 3 good bear bars, decent-sized bodies closing near their lows, to make traders believe that the bears have taken control. Bears trying to get a reversal down, but they need consecutive decent bear bars, not just bar 4. I understand bar 2 is bear bar and bar 3 is a good bear bar, but right now this is simply reversing 1 and 2, and it's not yet giving clear direction. The bears need to get consecutive big bear bars. Even then, there's support below. These highs will probably fall below them, at least it looks like will fall below them, and then the moving average and possibly yesterday's close. What happens to the bulls who bought the too low and scaled in? Well, I don't know. The location was not good, and the big tail on top of 2 not good. So I think a lot of bulls did not buy the too low, and you can tell. Just look at bar 4. Traders want to buy lower. Some bears might sell the close, hoping that this is the start of a reversal down. I'm not sure that it's worth it. I think the market is still deciding whether to break above yesterday's high or trade down to yesterday's close. Whenever you have a lot of trading range trading and 2 breakout points, the market usually dips below both. So right now it looks like we're probably going below the 74 high. To buy above 5 for a double bottom 1, the bulls would need maybe a 4-tick bull body closing on its high on bar 5. Without that, a lot of traders will wait for at least a micro double bottom after such a strong reversal down. If there's a trading range day, lots of reversals. And while we broke above the triangle, the follow through has been terrible and is at resistance. Yesterday's high 60-minute moving average. And therefore, it's a continuation of yesterday's trading range price action. We do not yet have a clear direction. The bulls want an opening reversal up. They're breaking above a triangle, and they see this as a pullback. And the bears want this to be a failed breakout above yesterday's high, and they want to get down to yesterday's close and yesterday's low. Right now, we're probably still always in long. It's still slightly more likely that this is a pullback from this breakout than it is a reversal. But I think it's confusing, and therefore we're probably going to go sideways for at least the first hour. Double bottom opening reversal with 3 bear bars, 4 big bear bar, and magnets below these 2 highs moving average. Probably sellers here. Possible low of the day, but more likely we're going to find sellers and we'll go more sideways to down. Probably have to get below both breakout points, which will take us to around the moving average and around the 50% retracement. Some bears buying back shorts, expecting it to fall at least 1 tick below 74, but not necessarily much more. So depending on where they sold, they bought back. I bought back shorts there. For the bulls to buy, they want a high 2 opening reversal up from the moving average, but enough selling. I think a lot of the bulls will want at least a small double bottom. So probably always in short. However, I still think it's going to be a trading range open. Is it going to bounce here? 74 high breakout point, moving average, 50% pullback. It might. But I think a lot of bulls will not buy above 8. If it's a 5-tick bull body closing on its high, they'll buy opening reversal up high 2 with bar 5, but they really need it to be pretty dramatic. We're back around the middle of yesterday's range, and it's a good location to go sideways. We're at the breakout point, 74 high and the moving average. Possible low of the day, but tight enough bear channel so that we'll probably go sideways, and the reversal up will probably be minor. If it has a 3-tick tail on top, that would increase the chances that it will be minor. For the bulls, it's an opening reversal, about a 50% pullback from the top of the rally at support. Excuse me. But big enough bear bars, 4, 7, lots of little reversals, up and down, down and up, up and down, down and up. This happens a lot where you have a reversal bar, a logical buy setup, but the bar is big and the probabilities are not as high as you want. And therefore, you're taking a relatively low probability trade with a big risk. And the result usually means sellers above and will go sideways more. Limit order bears who bought the one low. Limit order bulls who bought the one low, the moving average, the 74 high, all have made money. So not very bearish. A lot of bulls will not buy above 8. They'll wait to see if it reverses up strongly and then buy higher, or they'll wait for some kind of a double bottom a couple bars later. I'm going to open up my PowerPoint. This is a fairly common pattern where you get a gap up or a continuation of yesterday's rally and then a sharp sell-off on the open, and you get an opening reversal up. Here's a wedge version of it, around a 50% pullback to the moving average, and we get low of the day. Another version of it, gap up, rally, pull back to the moving average, and low of the day. This is what the bulls are hoping for, but they'll probably need at least some kind of a micro double bottom, because just like here, too many bear bars, the channel too tight, unlikely to go straight up. Who wants to buy above 8, right? Nobody. A big bar, big tail, tight bear channel. I'm talking about buying because we have a big gap up, initial rally, and around a 50% pullback. And therefore, I think it's not likely that this is going to be a trend from the open bear trend. I do not think we're going to do what we did yesterday. However, we're probably going to have to go sideways before the bulls come back. But this is still a 50% pullback from this rally. So the odds still favor some kind of a bounce, but we may need more of a base. Opening reversal up from the moving average, but 2 big bear bars and big tail. So probably more sideways here. bar 9, a multiple of 3. So these 3 bars created the 15-minute bar, and it's a big bull reversal bar closing on its high. The bull's opening reversal. We rallied from yesterday's close, pulled back to the 15-minute moving average, and we're trying to reverse up for the low of the day. But at the top of a trading range, big bear bar here, forcing traders to buy fairly high up. Even though we're always in long, it's really not a high probability buy. I think the bulls will want some kind of a second entry buy a few bars from now. For the bears, this is a 50% pullback from this reversal down. Sometimes we get that kind of thing. We had that over here. Strong bull trend, 50% pullback. Big sell-off, 50% pullback. This is what the bulls were hoping. Another version of it. Strong, big gap up, rally on the open, deep pullback, and then trend up. Still always in long. Buyers below 10, buyers down at the 8 low. Sometimes it gets all the way down here for a double bottom. Can you sell lower high major trend reversal? I would not. The context is good for the bulls. Plus we have pretty good bull bars. So I would want a decent sell signal bar and at least a micro double top. Probably buyers below 10. We're getting near the end of the first hour. Bulls are hoping that this is a double bottom and that we're starting to break up from the double bottom, and the bears are hoping that we continue in the tight range and then get another leg down. I do think we're going lower, but we may close the gap below Monday's low and form a lower high major trend reversal in the 60-minute chart before we go lower. Measured move down based upon the height of the top down here below the daily moving average. But a 5% correction is all the way down here, 27.25. For the bears, double top 6, but strong enough reversal up, good enough context. Probably buyers somewhere below 11, but they may be all the way down here at that 8 low. Sometimes you get reversal attempt and then you have to go down to that low or even below the low. I'm trying to find an example of it. Like this reversal attempt, and you get a new low, and then you need a wedge bottom before you go up. I do not think we will do that today. I think the buyers will be somewhere around a 50% retracement of this, so somewhere around here, maybe around the 8 high. Limit order bears sold the 8 high, thinking it was not a very good buy signal bar and good context, so they should make money, so we should dip at least 1 tick below the 8 high. Still, even though it's slightly more bullish than bearish, it's still pretty much a trading range open. Limit order bulls buying 11 low will probably make money, and limit order bears selling 8 high will probably make money. Right now, the bears who sold the 8 high are trapped and it has to get 1 tick below that 8 high, which I still think it will. We went up, we went down, we went up, we went down. Trading range open. Probably buyers somewhere around where we are. We might have to get down to the 8 low. But if they bought the moving average here, we're testing the breakout point again here. So we'll probably bounce and continue to go more sideways. If we get a very good buy signal bar, 13, it would be a swing buy. For the bulls, bull trend, bull flag, breakout, and pullback. Do I think we'll get a really good buy signal bar? No, it's a trading range open. So you have to assume that every signal bar is going to be bad. Selling below 2, selling below 11, buying above 8. If it is a good bar, if it looks like that, it would be an okay swing, taking a chance that we go up. Okay, so that's an okay swing buy. We may go sideways more. Would I sell the 13 high? No. Looks like we're forming another triangle. Lower high, higher low. I did not buy 13 with a stop. I'm going to wait to see if we get a micro double bottom with 13 or if we get a strong upside breakout. And for the bears, I think we're always in short. So I think we're always in long, so I would not sell here. Can you sell below 13, arguing a failed bottom? No, because we could easily get 2 or 3 small legs down before we get the bottom. So I think it's a low probability sell. 60-minute chart, double top bear flag at the moving average, but a whole bunch of small bars and dojis, and it's a doji as well here. Not a good looking sell signal bar, probably buyers below, which means probably buyers below the 8 low. The bears are still hoping that we get down to yesterday's close and maybe go outside down below yesterday's low, but they need to do more. Right now this still is more likely a pullback from this rally. New low of the day, but trading range day. The bears want a breakout and then a measured move down, which would be near yesterday's low. There's still a chance we could go outside down, but I think we probably will not. And that means I think we'll get some kind of a higher low, either up here or around yesterday's close, accelerating down, possible measuring gap, probably always in short. The bears would like one more bar, but this bar is a big enough bar so that it's a surprise, and a surprise usually has at least a small second leg down, and therefore a lot of bulls will not buy above 16. Limit order bulls bought 8 low, bought more 1 point lower, 2 points lower. They need to get above that 8 low. The bears will try to stop it and trap the bulls and force them to sell out. For the bulls, a wedge, but they would need a very strong 16 for traders to buy above it after that surprisingly big 15. Bears trying to keep the gap open below 8 to trap the bulls, but a lot of trading range trading today. So we have to assume limit order traders are going to make money. Sell the close bears. Now, is it really sell the close? I don't know. You have a breakout, but you don't have a follow through. I think it's better to sell the close if you have a breakout and a follow through bar. Possible low of the day, but tight enough channel so that we probably need at least a micro double bottom like this. Sell the closed bears, disappointed, and they bought back their shorts when they got down near the low close. Possible low of the day, reasonable swing buy, but probably we'll have to test down to that 15 close again. Therefore, it's unlikely to go straight up. Went above the high of the bar and had to pull back. Doesn't always come down to that low close. For the bears, they have a breakout to a new low. They're hoping that 1617 is a pullback from the breakout, a low on short, and that we continue down. But big enough reversal up, I think it's not a very good sell. There probably will be disappointed sell the close bears 15 who will buy, and therefore there probably will be buyers below 17 around the 15 close. Sell the close bears disappointed. They sell more 2 points higher, and they buy back their shorts at that 15 close. Break even on their first sell and 2 points profit on their higher sell. Other bears simply place a limit order to sell 2 points above that close, looking for the scalp. Now, this is a low one short, and we might still get a measured move down to the close of yesterday, the low of yesterday. But 16 is a good enough reversal bar to make a lot of bears not sell below 16 or below 17. The market is deciding. Will the sell the close bears 15 give up, and will we get a wedge bull flag, so bull trend, wedge bull flag, and low of the day, or are we going to channel down to yesterday's close? I suspect that a lot of the bears, after seeing 16, are scalping. Not a good looking low one sell. You can see there's buying around that 15 close. That means the sell the close bears bought. There still may be a huge number of bear dollars willing to sell. We don't know. If it starts to fall 5 or 6 ticks below that 15 close, then that means most of the bears did not buy back their shorts, and instead they pressed their shorts. They sold more, trapping the bulls who bought the pullback to the 15 close. There are bulls who knew the bears were disappointed by 16, and they would buy back their shorts at 16. So you have some bulls who place limit orders to buy the back of that 15 close, betting that will bounce. A lot of bulls want a second entry buy. So if 18 is a decent bull bar, that would be a better buy for the wedge bull flag. Bull trend, wedge bull flag, second entry buy. 15, big enough surprise, at least small second leg down likely, and 16, 17, 18 might be the extent of that small second leg down. Limit order bulls who bought the 17 low made money. It had to bounce 5 ticks, and it did. Bad looking low one short, following a pretty good bull bar. That makes bulls willing to take that buy. Tells you that the sell the close bears 15, not enough of them gave up. The bulls needed the bears to give up. They needed a give up bar. Instead, we're getting a breakout bar. Looks like we'll probably get down to yesterday's close. We might go outside down. If we do go outside down, we probably will not get far below yesterday's low. Most outside down days are 2 days that largely overlap, and the day that goes outside down usually does not become a big bear day. Limit order bulls 17 low, who scaled in, made money. We went one tick above that 17 low. So bulls are still making money, buying below 1, buying below 8, buying below 16, 17. Increases the chances that this will be a bear leg in what will become a trading range. Increases the chances that we'll get a bull leg. That's the second entry buy, but not a very good looking buy signal bar. Micro double bottom 1819. That slightly improves the probability for the swing bulls who buy above 18. What do the bears do? I would get out above 18. And bulls, I'd rather buy, if I'm buying with a stop. I've been buying with limit orders. And I also sold 2 points above 15 close. But if I'm buying with the stop, I want a pretty good bull bar. So it would be better for the bulls if 19 stayed as an inside bar, closing on its high. If the bulls do not get their buy, can the bears sell below 19? I would not do it. We're getting reversal, reversal, reversal. I don't want to be selling, betting on a successful breakout when the market's trying to reverse. Final minute of 19, the bulls needed to close on its high. Wedge, second entry buy, micro to the bottom, but not a good buy signal bar. Possible low of the day, but I'd rather buy after I see a strong reversal up. And it still looks like a bull flag that's retraced most of the rally. And therefore, because it's a bull flag, I don't want to be selling near the low. So right now, I'm trapped out. It's a better sell for the bears. The bear bar closing on its low. Trying to get down to yesterday's close and possibly go outside down. Bulls trying to get some kind of a wedge bottom. Small wedge nested within a bigger wedge, but the bulls need a decent buy signal bar. Very tight channel weakens the case for the bulls, but the context is okay. If it does go up, probably minor reversal, which means we'll go up and then probably have to get some kind of a double bottom. When the channel is this tight, usually even with a nested wedge, small wedge, big wedge, usually even with that, it's not going to go straight up. The best the bulls probably will get is a rally for a few bars, and then we'll need a test back down. Certainly an okay swing buy, but because of the tight channel, probably a minor reversal, and there'll be a higher probability buy several bars from now. Is it a high enough probability for a scalp? Now, that's always the issue, right? You're trying to get 1 point, 2 points, and how much are you risking? So it's not a great scalp. Bears trying to prevent the buy from triggering. But now if it triggers, it's a micro double bottom, and it would even be slightly higher probability. Can you sell below 22 bear bar in a tight bear channel? Magnet below yesterday's close. I think the math is not all that good. You can argue that even if we reverse up, the reversal up is minor. You can sell more higher and probably make money on the scale in part of the trade. But I personally don't want to be selling down here. Bulls are making money, buying below 16, 17, 19, or 18, 19, 20, right? Bulls are making money buying below those bars. So I don't want to be selling where the bulls are making money. We have a little overlap here, but it still might be a negative gap or measure move down, maybe from this high to that low. Takes us to around yesterday's close. Less likely the high of the day to the 8 low. I'm not going to take that short. The bulls have been making money. Can you simply buy at the market and put a stop 1 tick below 22, taking a chance that the bulls will prevent the sell from triggering? That's one of those low risk, low probability trades. You can see low probability. The bears who did buy 1 tick above the 22 low and put a stop 1 tick below, they lost their 2 ticks. But all they have to be right is 20% of the time for the strategy to be profitable. Bulls trying to get a good buy signal bar, but still probably a minor reversal. Because the channel is so tight. Very often I'll take a trade and get out a few seconds later. This is an example when it started to reverse up. I bought and then I decided I better wait, so I get out break even. Always in bears, I would get out. We have a nested wedge and a micro double bottom. So the bears micro double top 21, 24, and 5 tick trap. But the bulls are making money too often in here with limit orders, so I would not take the short, even though we're in a tight bear channel and we're always in short and we have room to targets below. That was the end of the second hour. Big bear bar closing on its low, but still in a tight trading range. Bulls want an IOI with a decent buy signal bar 25. That would be a higher probability buy than 23 because it would be a second entry buy. Another big buy signal bar, but low probability. So a very tight channel. We have a micro double bottom, failed breakout below, nested wedge, all good for the bulls, but a very tight channel, and is forcing traders to buy at the top of a big bar. Bears, they get out above 23, and the bulls are looking to buy. The bears theoretically sell again below a strong bear bar like 24. But to me, this looks like we're trying to get a minor reversal up, maybe to the 16 high, and then start to form a trading range. Possible give up bar here. The bears who get out above 23 are fine. The bears who did not get out above 23 might be giving up here. Target would be the 16 high, a reasonable buy. Whenever you have a huge buy signal bar and you're in a fairly tight bear channel or a tight trading range, whether or not it triggers the market, more often than not, pulls back about halfway, which would be right here. And some bulls will not take that buy, but they will take the 50% pullback buy, or they buy a reversal up after the 50% pullback. I don't have that drawn in accurately. Let me try this. No, this probably, well, let me do it this way. So that's the 50% pullback. For the bears, double top 21, double top 17. But micro double bottom and nested wedge, a lot of bears will not take that short. 25 is a surprise, but we have not yet gone above its high. So the bears still have a chance at a double top, but I think we're probably going above the 25 high. Bears want the double top bear flag, but we're getting too many bottom attempts, and the bulls have been making money too often in here. I think that lowers the probability for the bears selling below 26, and it makes me think there are probably buyers below 26, maybe the 50% pullback, and that will break above the 25 high and get at least up to the 16 high. That was a reasonable buy, and usually when traders take a reasonable buy and the market goes against them, they can avoid a loss or make a profit on a scale in lower, like above 23. Market's deciding double top bear flag or outside up after outside down, a surprise, and therefore we have to get a second leg up. For the bulls, reversal up, a pullback from the breakout of the tight channel, higher low, looking for a second leg up. We're in the buy zone, around a 50% pullback from this reversal. I still think it's a minor reversal. Very tight bear channel. Usually you do not go up very far, but I think we are going to go up at least a little bit. 3 consecutive bear bars, not good for the bulls. Double top bear flag here and here, but I still think we have consecutive outside bars, which is a surprise. Outside down, outside up. I still think we probably have to get at least up to that 25 close, maybe 16 high. Double top bear flags never look like they're going to work, but 40% of the time you get a measured move down. This is another one of those low risk, low probability trades. The bulls will get out below 25, and therefore they'll look to buy right above 25 and put a stop below 25. Other bulls who did not buy will do that as well. We have 3 bear bars. We're always in short. The odds favor a break below 25, but the bulls have an outside pattern, and they'll try to defend that 25 low. Can you sell on a stop below 25, the neckline of the double top? I would not, but if we break below 25, we may quickly drop to yesterday's close and possibly yesterday's low. The market's deciding, will it get down to the support areas here and here, or will we reverse up from just above support? Bulls need a pretty good buy signal bar. If they get it, they'll try to get a double bottom, break above the neckline, and go up to the middle of the day's range. This is similar to yesterday over here. Strong sell-off. Bulls trying to get a reversal up. Some bulls bought above that bull bar, stopped below 65, and the bears could not get below. They got exactly to it, but not below. And then we got a swing up. And we don't know if that's going to happen here, but it's the same idea. Bulls give up below 25, other bulls buy right where we are, looking for a break above the neckline and a measured move up. This is, it's interesting. Always in short, but the bears really need to get below 25, and therefore some bulls will buy here, stop just below 25, taking a chance that we got to swing up. Odds are they're going to get stopped out, but the risk is small compared to the reward, and the math is okay. Bears not getting a big breakout, so the bulls are not giving up. This could still be a pullback from this reversal. Sometimes the pullback goes below the bottom of the reversal. So it's still a buy above 31 if the bulls get a decent bull bar. strong rally, and we have a reversal down, but I think this is more of a pullback from that rally than it is a failed breakout below the bear low. So I think even though we went below the bottom of the bull trend, I still think it's a pullback. Same right here, strong rally. We pulled back below it a couple times, but I think this started the bull trend, even though the bear trend went a little bit lower. Same thing here, strong rally, new low, but this might be simply a pullback from that. This would be a buy above the bull bar here. Basically a small expanding triangle. Low, low, lower. Difficult for stop entry buyers. I'm not sure the bears ever went short again. Theoretically, they'd get short below a decent bear bar 27, but I think it looks like we're trying to bottom. And stop entry bulls, they keep being forced to buy high. They never triggered above 25, has not triggered above 31. Bears want a bear IOI and a continuation down to yesterday's close. The bulls need a pretty good reversal up, which they're not yet getting. They're not getting above decent bull bars. Still in a bear channel, a bear IOI, but bulls are making money so many times through here that I don't want to be selling too close to the low. Bulls have been buying below bars and making money, new lows and making money. They may start to buy below bear flags and make money, like below the 32 low, so not a very good sell. Can you be long here? You probably can, but you stop below 31. You just hate to put stops below bars when you know bulls are buying below bars and making money. It would be better for the bulls to get a good buy signal bar and then have a stop entry buy above the high of the bar. This is probably a bear leg in what will become a trading range in the market, is deciding where the bottom of the range will be. We're getting a lot of buying here, but we're not getting upside breakouts. And therefore we could continue endlessly, down to yesterday's close, down to yesterday's low. The bulls need to get a strong one or two big bull bars closing far above the moving average, and that would probably signal the start of a couple hours sideways to up. Not a strong buy signal bar, but possible low of the day, okay swing buy, higher probability, wait for a strong breakout above strong bull bars and above the moving average. High enough probability for a scalp. Probably an okay swing, but higher probability to wait for a big bull bar. Bulls trying to get their bar. Target is the 16 high. That was a reasonable buy for a wedge bottom. Bears will try again for a double top. 26 high. You have buy the close bulls 25 who did not use a stop or used a wide stop, disappointed by the sell-off, maybe bought more above 33 and trying to get out at least part, break even at the 25 close. Bulls need probably one more good bull bar to flip it back to, or to flip it to always in long. Even though this is probably the start of a swing up, we have a lot of reversals today. And therefore you're going to be thinking that the bulls will be disappointed by either a tail on the top of 35 or by a weak follow-through bar 36. This area has been support and resistance. So it's an obvious magnet. You can see resistance, resistance, support, support, break through it, resistance. Okay bar for the bulls, right? You know, not huge, and plus we did not break above 25. I think the bulls need one more bar for always in long. The bears still have a chance of a double top 25. We're probably always in long. We're getting a lot of bull bars, 16, 21, 25, 31, and then 3 consecutive bull bars here. For the bears to short below 36, you know, I think they would need pretty much a 2-bar reversal like we had the other day over here. They would need a very strong reversal. Double bottom bull flag after a bull reversal, probably buyers below, but then when you get a reversal that big, some bulls will not buy and some bears will sell. And the bears probably need something like that here. Bears trying to create a low 2 short, 32, and a double top 26. Remember I said, because of the trading range day, you have to assume the follow through, there'd be something wrong with the reversal up. And if 35 closes on its low, I think a lot of the bulls will get out below. Aggressive bears would sell, but we're getting so many bull bars and we have a target above. I still think there'll be buyers below 36 and that will go a little bit higher. Terrible follow through for the bulls. Bears will sell for a swing, not for a scalp. And a lot of the bulls might get out there, but I still think it's slightly more likely there are buyers below and that we're going up to this area, which has been an important price for a couple of days. Breakout test, 31 high, so possibly a measured move up, which, no surprise, takes us to the resistance level, the magnet above. Not a good high 1 bull flag, but magnets above. This entire sell-off, I think, looks like a bull flag. We have a rally and a very deep pullback, but the reversal up, not very good. You know, none of it looks very good. I bought above 33 outside up. I did not get out here, and I just get out here, but I think we're going higher. No, this is more like what I'm talking about. We have a gap up in an early rally and then a very deep sell-off, and you get a reversal. This sell-off was so deep, I doubt we're going to get all the way back to the high of the day. But you know, we could go sideways to up for possibly the rest of the day, like this. Another example. Bulls trying to get a wedge bull flag after a gap up and an early rally, and it rallied for the next several hours, not strongly. So I think today's probably going to be like that, or like this rally that does not get all the way up to the high. Another version rally did not get all the way to the high. So the bears is a wedge with 32 and 36, but I would not short it. I think we're always in long, and I think we're going to get up to the resistance area. I'm back to flat. If we go sideways here and maybe form a triangle and get a bull bar for a buy signal bar, that might be another buy. For the bulls, double bottom bull flag, another breakout test, 31 high, but 3 consecutive bear bars. I still think we're slightly more bullish than bearish despite that big sell-off, but I don't think this is going to be, I don't think we're going to get much of a move up or down today. I think it'll be like these examples, that will probably end up going sideways, not much activity. Just look at the past 20 bars, right? If there's no energy up or down, the market is happy just about where it is. So it'll probably be a lot of limit order scalping. Not a great stop entry buy. I still think we're probably always in long since we reversed up on 35. We're probably always in long on 25, even though we got a new low. But probably more traders believe it on 35. The bears still hope this is a bear flag and that we get down to yesterday's close. I am flat. This is a swing short. But with all of the reversals up that we've had, I think it's more likely we're going to go sideways to up. This is probably a bull flag, and this is a weak breakout above the bull flag. So bull trend. Sorry about that crash. I may have to buy another computer, even though this one's only a year old and it's a pretty high-end computer. I know there are other people who have TradeStation running and it's not crashing, but I also have GoToWebinar running, and I don't know if that's what's causing the crashes. Limit order bulls made money all the way down. Limit order bears have made money selling about 16, bull reversal above 21, above 26. Will the bulls get a gap here and trap the bears? Probably not. We're near the target area. This has been resistance and support, and resistance, probably resistance. The limit order bears selling above 38 probably will make money. If we do get a big bull breakout, then we'll probably get back up to the 60-minute moving average. Most bulls right now are buying pullbacks, not breakouts, because we've been in our trading range for almost 30 bars now. Now, you see how 43 high got to within 2 ticks of 16 high. Usually that's not a reliable test. Usually you have to get to within at least one tick, and therefore we're probably going at least 1 tick higher. And that means a lot of the bears will not sell this, even though it's a possible wedge, 1, 2, 3. The odds are we're going at least a little higher. For the bears, opposite of the problem that the bulls had here. Big bars buying above big bars. For the bears, it's selling below a big bar, and we still have a magnet above. We got right to the 8 low, so it's a breakout test of the 8 low, and that might be all the bears were trying to do. You get a reversal down from the 8 low, but I think that 16 high is important because it was a reasonable buy for a wedge opening reversal, and we did not get to within a tick of it, so I still think we have to get there. Micro double top for the wedge, but I still think we have to get up there. I'm not opposed to taking the short. I'm not taking it. To me, this is a limit order market for the past 30 bars. So I don't want to be selling with stops because then my risk is too big. At resistance, the bull is trying to break back above it, trying to reverse this. This looks like a bull flag after this bull trend. In the resistance zone, but the bulls are trying to get a bull breakout above a wedge bear flag and then up to the high of the day, 60-minute moving average. The bears tried to get upside down, but they could not. And therefore, we're probably going to test the open next. And the day may end up closing around the open for a doji day. Bears want a bear bar for failed breakout. We've sold off at this price level a couple times yesterday. We bounced from it today, but this is, I think, a big enough breakout so that we'll probably get at least a small second leg up. I don't think this is going to amount to a big bull trend, but we're close enough to the open to make me think that we're probably going to try to close the day around the open. What about the limit order bears 43? They'll probably make money, but this is a big enough bar so that we might get a second leg up to the open before we get a pullback to the 43 high. If 48 closes like this on or near its low, I think the bulls will get out. Bears might sell, but it's a pretty tight channel. I would wait for a second entry short. Bad looking sell. So we'll probably get a second leg up just like this. One pullback, two, and we'll probably get closer to the open of the day. It's possible that 49 is the second leg up, but we're still close to the open. I think we have to get there. This is not great for the bears. They wanted to sell above a bear bar like 48, did not get a chance. Some sold 43 high, 1 point higher, and they'll probably make money. We'll probably close the gap above 43. I don't think they'll swing. If we get a big reversal down, a surprise bar, then we'll probably get a couple legs sideways to down. But right now, I think we'll get to the open of the day sometime in the next hour, maybe in the next few bars. A day with a lot of trading range price action, getting near the open of the day. Usually we have to get to the open of the day. Bears buying back their shorts. We fell one tick below 43 high. Other bears were selling for a swing, hoping that this resistance will hold and that will get down to the 42 low. And the bulls, I think they're still willing to buy. We had a bull flag at the moving average and we have a magnet above, but they do not want 50 to be a big bear bar closing on its low, and they especially do not want it to get any bigger than what it is right now. They're hoping that 51 might be a small bull bar, a pullback. So bull breakout, pullback, instead of bull breakout, failed breakout, and reversal down. On the 15-minute chart, you can see that the channel is tight. We've had 6 consecutive bull bars. We had one small pullback, but a very tight channel with 6 bull bars. Chances are the first reversal down will be minor. Well, the bulls 50 is a pullback from the 47 breakout, but it's a big enough bear bar so that we'll probably get a second leg sideways to down, and therefore most bulls are not going to buy above 51. The bears are hoping that it's a reversal up on 47, down on 50, but 50 is not nearly as big as 47, and therefore the bears need consecutive bear bars, which they're not getting. So we'll probably go sideways here for 3 or 4 bars, and then the bulls will try again to get to the open. Or the bears will succeed in getting a couple decent bear bars, and then we will get a swing down. More likely, we're working up toward the open. Breakout pullback by probably a wedge on a smaller time frame, 48.50, but not particularly good buy, pretty tight range. Might have to go sideways for another few bars and form a small little bottom, 53, 56 maybe. Stop for the bulls below 42 probably. And for the bears, they have, I would not sell above 53. Sell above 50, yes, right? But I would not be selling this low down. Another crash up to the open of the day. Probably not much more than that. Bulls would like a gap, a breakout above 48 to stay open, but bears have been making money selling at highs all the way up, just like bulls made money buying with limit orders all the way down. So most traders do not believe this is going to be the start of a big move up. We'll probably end up closing the day around the open, and today will be another day with prominent tails, maybe another doji day. This is the sell zone, and you can see a lot of the bulls took profits. They've been waiting for it to get to the open, and when it did, they sold. And it looks like a lot of bears knew the bulls would do that, and the bears sold as well. A lot of times around 11 o'clock, 11:30, the market will have a trap up or down. A lot of times if it's a bull trend, you get a bear trap. If it's a bear trend, you get a bull trap. This is a trading range day, and right now it's a bull trap. So what do you do if you bought the breakout? Well, if you did not scalp, you're in trouble. Can you sell on a stop below 54, below 55? I think trading with stops on a day like today, past 40 bars, very dangerous thing to do. Especially trading with stops entering low or buying high is a bad thing to do, because every breakout attempt has reversed. That's the announcement from the FOMC. I didn't even think about that today, but that's what that is. When you have an FOMC report like today, usually I don't do anything for the first 10 minutes because 50% of the time, the initial move, no matter how strong, reverses. I usually wait until at least the second bar. In the old days, we used to get breakouts with good follow-through. That was pretty common after the FOMC announcement. Bear breakout with good follow-through. Bear breakout with good follow-through, at least a little follow-through. This is more like what we've been getting lately, where you get multiple reversals here. There was a trend late. here. It went down, it went up, it went sideways. This is much more like the recent FOMC reports. Same thing here, lots of reversals. For the bulls, it's 2 legs down, 1 pullback, 2. Does not matter that the pullback went above the top of the bull trend. And for the bears, they're hoping it's a reversal down and a pullback and the start of a swing down. I think we need more information. It looks like a continuation of the past 40 bars trading range. So I would not buy above 56, and I would not sell below 56. If 56 closes on its high, then I think we're still always in long. But you're also buying in the middle of a trading range, right below resistance. These highs and the open of the day. I think better to wait. The probabilities are not high. The probabilities will follow through. Probabilities will follow through selling below 55. Probabilities will follow through buying above 56. But the stops are far. So you've got low probability and big risk. Not a good combination. Bulls made money buying below 55, a big bear bar. Bears made money selling above 56, a big bull bar. I think most traders should wait. Yesterday had lower highs, higher lows, triangle. And today so far has a lower high and possibly a higher low for another triangle. For the bulls, a higher low, 2 legs down, 1 pullback, 2. If the bar does not get too big, and if it closes on its high, it would be a swing buy. But scalp entry buy, I would not do it. Even for a swing buy, I think it's not a very good trade. I think it's still better to wait. You know, we're reversing every bar up and down and up and down, up and down. Another crash. So I'm not sure if it's TradeStation. I applied some patch that they have because they've been having problems with TradeStation locking up, freezing. But I applied the patch and it's still locking up. Bears down to yesterday's close. Big expanding triangle. We had a smaller expanding triangle here earlier. The bears would like the day to become outside down and trade below yesterday's low. I'm not sure that it will. Limit order bulls buying 31 low again made money despite a 10-point sell-off in 30 minutes. Because the limit order bulls made money right here buying below 31, I think it makes other bears hesitant to sell as the market's falling, getting close to yesterday's low. Might go outside down, but if it does, we're probably not going to fall far below it. This is, I think, pretty difficult to do anything right here. As I've been saying, I think because the higher time frame charts have never been as overbought as they are, there's an increased risk of like 100 points down in 2 or 3 days. And everybody knows that, and that's why we keep getting these, yesterday the gap down and then nothing. Here we have a big bear breakout, and so far nothing. But on the day when we do begin the move down to 27.25, you'll get a bear bar, and instead of a reversal, you'll get another bear bar and another bear bar, and it'll be just, it'll be amazing. Bears want a breakout, but they don't like this big bounce, and the bulls obviously want a failed breakout. 59, something of a surprise, so a lot of the bulls will want a micro level bottom before buying, and the bears do not want to see a big pullback just after a breakout. Too much risk that the breakout will fail. Probably at least a little bit more down, a big enough bar to be a surprise. What about buying above 59 for a failed test of yesterday's low? I would wait for a second entry buy. I'll get rid of this line. Don't want too many lines on the chart. Fighting over the appearance of the follow-through bar. Big bear breakout 59. Bears want no bull body. Bulls want at least a 1-tick bull body. Bulls would prefer 60 to close on its high for second leg trap in a trading range. First leg down, bull flag, and then second leg down, a big bear bar, an attempt to convert this into a bear trend. Low one short for the bears, but the bottom of a 2-day trading range, so probability not high. So swing only, higher probability, wait to see if we get the breakout. But even if we get the breakout, the day is then an outside down day, and most outside down days do not become big bear trend days. Normally it goes a little bit below yesterday's low, but not much. And for the bulls, a second leg trap, but they were unable to get a convincing buy signal bar 60. So possibly sideways here. The market rallied on the 59 close and then pulled back on the 60 close. You have disappointed bears who sold the 59 close. They're disappointed by 60. And it looks like a lot of them bought back their shorts when it got down to the 59 close again. Did not get below the 59 close. So some of them placed limit orders to get out with a 1 or 2 tick loss. Might get an II here. We are getting an II here. But bull bars make it a low probability short, and the big tails on top make it a low probability buy. We're probably always in short simply by the size of 59, but this is not a high probability short. Also, we may only get a small second leg down. Right now, the market is still, the bears are still trying to get below yesterday's low. Bulls trying to reverse up from just above yesterday's low. That's a fairly common thing when the market trades above yesterday's high and then sells off to yesterday's low. It's pretty common for it to reverse up from just above yesterday's low. And even if we do go below yesterday's low, we probably will not go far below. This is like today, above yesterday's high and sold off strongly, but reversed up from just above yesterday's low. And you can get a very sharp reversal when that happens. Another example, traded above yesterday's high, reversed down. Very strong sell-off, but could not get below yesterday's low, and the bears gave up and we reversed up. This, therefore, is a potential buy signal bar for a swing up. It's possible we can get all the way back up to the open of the day. Is it likely? No. We've had so much trading range trading today that it's unlikely to reverse into a strong trend. The sell-off is not all that strong. Bear bar, bull bar, bear bar, bull bar, bear bar, two bull bars. But this is a potential buy if 62 has a bull body, especially if the body has maybe a 3 or a 4 tick body. To buy, I need this to be a good bull bar. We have about 15 seconds left. Okay, so I'm not going to buy above 62. If 63 is a 2-bar reversal, a bull bar closing around the 62 high, that would be another reasonable buy setup looking for a reversal up. 60-minute chart does not look especially bearish, right? Bull bar, bad follow through, bear bar, bad follow through, bear bar, probably bad follow through. A 2-day tight trading range. The bears are trying to get a breakout. The bulls tried to get a breakout earlier. Bar 63, a multiple of 3, and therefore it corresponds to a 15-minute close. For the bulls, 2 legs down, 1 pullback, 2, but 4 decent bear bodies. Stop order bulls want this bar to be a very good bull bar, which it's not yet. I think it's difficult to do anything. You know, we're not getting high probability signal bars, and we're getting reversals every few bars. And the bars are very big. The chance of a big move is greater. Therefore, limit order traders are hesitant to enter with limit orders. Stop order traders are hesitant to enter with stops because the profit potential has not been good. Not a good buy signal bar, not a good double top sell signal bar, double top 61, 63. Near the bottom of a trading range, but we're not reversing up strongly from above yesterday's low. So it makes me think we probably will go below yesterday's low and then reverse up. A lot of this pause was created by bulls betting we would not get below yesterday's low. And the size of this bar indicates that those bulls are giving up. Next significant target is 2,800, big round number, but probably too far to get there today. Not getting consecutive bear bars. Every bear bar has been followed by a bull bar. that makes traders hesitant to sell closes because they can see the pattern. You get a big bear bar, next bar might be a bull bar. So it's easy to get trapped out. Parabolic wedge, 1, 2, 3. Failed breakout, but the bulls need a good buy signal bar, otherwise they will not buy. That green line is the low of the week. We're getting close to the low of the week. I've talked several times about the weekly chart. Consecutive bull bars might get one more buy climax, but unlikely to get more than that. And last week was that one more buy climax, so we've probably begun a pullback on the weekly chart. Bears will get out above 65 if it has a bull body, especially if it has a big bull body. And if it has a 3 or 4 tick bull body, bulls might buy, looking for a test of the most recent sell climax high here or here. But if it's less than perfect, I think most bulls will not buy. Outside down usually does not stay far below yesterday's low, usually gets back above yesterday's low at least briefly, and sometimes reverses up a lot. But the bulls need either a good buy signal bar or a strong reversal. Potential for a big reversal here, so okay, swing buy if the bar closes near its high. For the bears, I would get out of shorts here, one tick above a bull bar and a parabolic sell climax. For the bulls, it's a swing buy, not a high probability buy. Higher probability to wait to see if we start to reverse up strongly and then buy. I'm going to open up my examples PowerPoint, and I hope that the computer does not crash again. Outside down, huge collapse, but a pretty big reversal up. Outside down, reversal up. Outside down, we needed a double bottom, but we still got a reversal up at the end of the day. Here, not much of a bounce. Here, no bounce at all. We just sold off to the end of the day. But this is what the bulls are hoping for, at least at least a couple small legs up and a retracement of some of the sell-off. Outside down, reversal up. For the bears, a breakout pullback short, but parabolic wedge, pretty decent reversal. I think most bears will not sell below 66. It was a decent bear bar, 4-tick body closing on its low. The always in bears would sell again, but I would wait for a second entry short. We have, I think, parabolic wedge bottom. We have 4 sellouts, 1 or 1, and then 2 and 3. First target, top of the most recent sell climax here or here, and usually a test of the moving average. Kind of like this huge bear day. Look for a test of the top of the most recent sell climax and the moving average, and at least a couple legs sideways to up. Let me put up a 1-minute chart to see exactly where the sell climax is. Okay, in the 1 minute chart, the sell climax is pretty clear. So that would be the target. Looks like some bulls scalped out 1 point. They were concerned about the tail on the top of 65, but we should go higher. Those in bears, I would not sell. I would wait for at least a micro double top, a second entry sell. The bears made money selling below bull bars, 56, 58, 61, 63. I would not sell here, so I think not many bears will sell below 66. I still think we're going to get up to the 64 high in the moving average. Parabolic wedge, like all wedges, you usually get a couple legs sideways to up. Bulls trying to prevent a bear bar, and they're certainly trying to prevent 67 from closing on its low, and they're trying to get up to the 64 high, and the bears are trying to do the opposite. They're trying to get a big bear bar closing on its low. They're trying to get the bulls to give up. While not likely, we could still get all the way down to 2,800 today. Right now we have a gap, 62 low. The bears are trying to keep it open, and the bulls are trying to close it. If we get a couple ticks above the 62 low, then we'll probably get up to the 64 high and the moving average, maybe all the way up here. I bet the volume is pretty big here. Let me just check. Not all that, surprisingly not all that big. Let me take a look at ticks. Well, that's interesting. Ticks hit minus 1,000 here, and usually you'll get a lower price, but this is so climactic that we might not. This might be a climactic end of the sell-off. 5 minute chart ticks down to minus 1,000. Usually the low tick reading of the day is not the low price reading. Normally price has to go a little bit lower. Bulls trying to defend the 65 low. Theoretically, they get out there, so they're trying to buy that. Like yesterday, 65, 67. Not a good looking buy signal bar, but it's still on the buy from 65. Bulls trying to get bull bars closing on their highs, and they're trying to get the next bar to go above. And bears continue to get lower prices, but this is a parabolic wedge bottom and a microdouble bottom, and I think that makes it more likely that we're going to bounce than it is that we're going to go down. Bulls trying to trigger the buy above 65 again. It never hit the stop. Not a great buy signal bar. 68. Probability, when you have an outside down day, probability is you're going to get a bounce back up into yesterday's range. You don't have to stay in yesterday's range, but probably you're going to get back into yesterday's range. We did briefly here. We have the parabolic wedge. That is another reason to expect a bounce. Well, we're not getting good buy signal bars, 68, and so far 70. Bulls trying to hold the low, and bears know the bulls are trying to do that, and the bears are trying to break below the low, and they'd like the market to just collapse down to 1800 if possible. Their first target is last week's low, which is this green line. Microdouble pullback. Whenever you have a microdouble bottom pullback, you're usually in a triangle breakout mode. This is a second entry buy, same price as 65, still on the swing from above 65. Bulls need to start getting consecutive big bull bars closing on their highs if they're going to get up here. And the bears keep trying to prevent that, and they're trying to get a bear flag. The bulls need more bull bars. This is not enough. For the bears, it's a double top bear flag. Not a good sell. Consecutive bull bars, pretty good reversals. But the bears are trying to keep the gap open, and they know the odds are we're going to get to the top of the sell climax up here. And they're just trying to take a low probability bet. We're probably going higher, and the bears are shorting, hoping to get a huge collapse. I said a lot of the bears would not short the first reversal down 67, and I would not short below 69, but now we have a double top, and if the bears do get a bear bar 72, especially if it has a 3 or 4 tick bear body, I think the bears will consider shorting that. This is the 1 minute chart. That's the top of the sell climax, and I think that's the magnet. And on the 5 minute chart, it's right there around these tails. The bears get a decent bear bar. Traders will sell. They'll need a pretty good bear bar, and bulls will get out. Odds are we're going up a little bit more. We still have plenty of time to get there. We might not get there until the final couple of bars of the day. A lot of times it'll pull back, and you think it's not going to get there, and then it does get there. There'll be some bears selling at the moving average, but I would not after these 3 bull bars, and with obvious targets above the 64 sell climax high, and then the actual sell climax high, which you can see on the 1 minute chart. 4 points up, okay to take partial or even full profits. Very close to the targets. It's possible we could go a lot higher, but not likely. I did buy. I bought here, stopped below here, and I just got out. One of my concerns is we've had so much trading range price action today that anytime I see something strongly bearish, I assume it's not going to go too far. Likewise, when I see something strongly bullish, I assume it's not going to go too far either. So when there's a lot of trading range trading, I'm more willing to take quicker profits. Like over here, same thing. I doubt that I'll short again today. I think we're always in long with this reversal, and I think we'll either be sideways or possibly a little bit higher. I doubt that we're going to get down to the low. I also doubt that we're going to go a lot higher. I never get upset by the market continuing beyond where I exit, as long as what I did makes sense. We're obviously above the top of the sell climax. We're testing up near the breakout point, the 58 low, and we're testing the 31 low, bottom of the trading range. But I am flat. I said that if we went outside down, we probably would pull back at least a little into yesterday's range. And I showed examples where not only does it pull back, it reverses up sharply. And today is another one of those examples. Is it by the close? Yeah, but I am flat. I'm flat and I cannot sell, and I'm hesitant to buy. So I'll probably stay trapped out for the remainder of the day. Sometimes when you have an outside down day, the reversal up is so strong that you go all the way back above yesterday's high, and that's what the bulls are trying to do here. I don't think it'll get all the way up to yesterday's high. but it might get to the open. Looks like it will get to the open. 60-minute chart, 2-day tight trading range, bear breakout, reversed up. Bulls are hoping that we get to a new all-time high. I think we'll go higher, maybe close this gap, but then probably form a lower high, sort of head and shoulders top on the 60-minute chart. Too much buying to take that sell. Probably we'll go sideways here. We're back to where we were at the time of the FOMC announcement and back into that tight trading range. I not trade anything here. Sometimes I'll put up a 1-minute chart and take a scalp. We have a series of buy climaxes here, but I ended up not taking the short. And obviously, I'm not buying up here. So, and then for 5-minute stop entries traders, you have a common problem. A very big bar, so if you sell below it, the stop is far above, your risk is big, and you're selling in a very strong bull trend, so the probability of a big move down is small. So you have big risk and low reward. Usually, you can make a couple points scalp on something like that, but here, is it even 2 points? I don't know. It's not even 2 points. So in any case, I would not do anything. I'm going to wait for tomorrow. And I think, as I said, that we're probably going to rally around 28.50 at some point over the next week. And I think it'll be on a lower high. And then we'll get somewhere down here near the weekly moving average over the next few weeks. Just curious to know the volume. Bar 78. About 120,000 contracts. And I thought it might be big FOMC day plus an extremely big reversal. The bulls were hoping that this is basically a final flag. So a sell-off, tight trading range, and failed trend resumption down. So final flag, and the bulls want a reversal up, maybe a measured move up based upon the height of the flag. So that would take us somewhere around here. In 28.50, 28.60, which I'm hoping we reach over the next week or so. I think it might be a good place for put spreads or outright puts. Well, pretty entertaining day, and I think, as I said, the VIX has been picking up for the past several weeks. And I think that's signaling a change in the market. And obviously the market has to change. It cannot continue in a tight bull channel like this for very long. It has to transition into a trading range. And I think that's what it's doing now. The bulls are hoping that this is the bottom of the range. I think they're wrong. I think we'll get at least a 50% pullback over the next several weeks. That would be 27.60. But I also think that we'll get a 5% pullback, and 5% pullback is 28.30 or so. And the weekly chart, I think, is really fascinating. Never in the history of the stock market, the 120 years of the Dow, the 100 years of the S&P, never has a weekly chart stayed above the moving average for this many bars. I think it's like 65 bars now. And therefore, it's likely to touch the weekly moving average pretty soon. Here's the problem. Look where the weekly moving average is, 26.50. And look where we are, 28.30, right? That's a huge drop. Right now, I think, let me just update it real time. So right now it's 26.70, but that's still, a big drop and 200-point drop from the high. I don't think it's going to drop to 26.70. It might. This moving average is rising, and by the time the stock market hits it, it'll be around 2,700, 2,730 or so. It'll be around a 5% pullback, and that's another reason why I think we're going to get the 5% pullback, because it'll correspond to the weekly moving average. I think this is really it's fun intellectually to think about what's going on. Monthly chart, 15 months without a pullback. Never has happened in the history of the stock market, 100 years. And therefore, it's probably not going to continue much longer. January, the biggest bull bar, extremely late in a bull trend, probably an exhaustive buy climax, and the target is the bottom of the buy climax, the January low. And that would also be last year's close, and therefore all the gain that we've had so far this year will probably disappear at some point in this year, probably in the next few months. And, right now that's 2670 area, 26, that general area. So, we may, I think that's where we're headed. I don't know if we'll get there in the first leg down, but I think at some point this year we'll get all the way back to December's close and give back the entire year's gain. Monthly chart, this month is, January is huge. Wherever it is, 2885 at the top or 75 at the top, 2690. It's, like 180 points tall. I said that we're going to get a pullback. We have 15 months without a pullback. Never happened in the history of the market. And for a pullback, if we were to pull back in February below the January low, that would be 180 points to get down below the low of that bar. The bar is 180 points tall. I don't think we'll do that, but what I think will happen in February is February will pull back, but not below the January low. And then I think March will trade below the February low, and that will be the pullback. First pullback in a micro channel, the bulls will buy it. Even if it pulls back for 2 or 3 months, the bulls are going to buy it. But I think that's what's going to happen. February will be a disappointing follow-through bar for the bulls who hope February will be like January. It's probably not. And then March will probably trade below the February low. It's possible February could trade below the January low, and that could be the pullback. But because January is so big, it's more likely that February will be a disappointment bar and March will trade below February. In any case, the character of the market is changing from, if you've only been trading for a year, you just assume that the weekly chart just goes up and up and up and up and all the time. And it does not. And this is going to change. We'll probably initially enter a trading range, but then we might start to get some pretty big swings. So we're at this point right now, and this is what followed. So strong bull trend, transition into a trading range, and pretty sharp sell-off here. That's 200 points. That's about a 10% correction. And then after that, this is what followed. Lots of sideways trading. And in here, I think we got a 20% correction at some point in here, or certainly at least a 10%. That's what the next year is going to look like. We're going to become increasingly two-sided. So instead of just going up in a very tight channel with no pullbacks, we're going to start to have reversals. Daily chart, we've broken below the very tight bull channel, and first reversal down probably will bounce. So I think we'll try to gap up maybe tomorrow and get a 2-day island bottom, but I don't think it matters. I think this is enough of a down move so that we'll get a second leg sideways to down. So that means if we gap up or rally tomorrow, we'll probably get a lower high and then a second leg down. For stop entries today, yesterday was a triangle, a trading range day. And I said on the open, when you have a triangle, we have higher lows, lower highs. When you have a triangle, 50% chance the first breakout will fail and reverse. And then ultimately, when you get a successful breakout of the triangle, 50% chance it'll be up, 50% chance it'll be down. We gapped up and broke above the triangle in the open, but reversed, very weak reversal. Then we broke below the bottom of the triangle and reversed. And now we've had 2 reversals from above and below. I think the triangle now is no longer important. So I think the market is not thinking, Tuesday was a triangle. I think what the market is thinking now is the market's been sideways for 2 days. We broke to the downside and reversed up sharply, and probably will get follow through over the next few days. First bar of the day, possible low of the day. Similar to yesterday, a big bull bar, and next bar, a doji bar, and it became the high of the day. Today, first bar, big bull bar, second bar, doji, it became the high of the day. For the bears, some bears sold at yesterday's high. I would not buy above 1. I said on the open that I would not buy above 1 because I wanted to see it break strongly above resistance above yesterday's high and the 60-minute moving average, and it did not. And the reversal down below 2 is selling below 2 bull bars, probably buyers below, so not a good sell. And then we have a high 2 buy at the moving average, opening reversal up, gap up, rally, 2 legs down, 1 pullback, 2. But the bulls could not get a good buy signal, bar 8, and therefore we're probably going sideways. For the bears, they have a lower high after the failed breakout of yesterday's high, bar 10, and a double top lower high 6, but 4 bull bars, probably more sideways buyers below. For the bulls, they have a pullback from the breakout. We have a bull trend, a bull flag, a breakout, and then a pullback, bar 11. And it's possible that we could have gone up from there, but I wanted to see the reversal up and then buy higher because we may continue to fail at yesterday's high in the 60-minute moving average. And 13 ended up trapping the bulls. Those who held, obviously once you get the 2 big bear bars, I would get out. I would have gotten out. I would not have taken it, but had I taken it, I probably would have gotten out below 14, a bad entry bar and possible trading range. But because it was a reasonable buy, you always got to be thinking that scale and bulls will look for another reasonable buy and buy more lower, like maybe above 34, and then try to get out, break even on a rally back up to the 13 high. On the FOMC report, did not get there and reversed down sharply, and the bulls who were long from the 13 high gave up. Very quiet trading in here. I said that I thought it was interesting how the limit order bulls were making money so effortlessly all day, below 1, below 8, below 16, 18, 19, 20, 20, everything. They were just making money all day long, and that made it likely we were going to get a bull leg. So we sold off for a couple of hours. We were probably going to rally for a couple of hours. And the bears made money very easily on the way up, and that increased the chances that we would get a bear leg. And on the FOMC report, we had a big bear bar, and then a reversal up, and then another bear bar. And 59 was a surprise bar, probably going to get at least a small second leg down, maybe 62, but no good buy. And the bears got one more plunge, 64, and a parabolic wedge with you got a tight bear channel with 3 sell climaxes, 4 if you count 55, 57, and then 59 and 64. And a pretty good bull bar, 65, reasonable buy, stop below 65. The always in bears definitely get out above 65. They can sell it again below a bear bar, 67. I would want a second entry sell. And then you have a second entry sell, 69. But we're still above the 65 buy signal bar low, so I would wait to sell below the 65 low. We never got there. Parabolic wedge bulls prevented the market from getting below 65. Could not get a good buy signal bar, 68. However, got a decent buy signal bar, 70, for a test up to the sell climax high, somewhere in here in the moving average. And we went quite a bit above that. We went back up into the trading range. Stop entries today, there were really no great ones early on. We knew that. We knew it was going to be a trading range open. Right on the open, we knew that. The first stop entry trade I would consider, but I did not take, was the 13 high. And then the 16 high was another possibility for a gap up and then a bull flag, a wedge bull flag. 3 pushes up, 1, 2, 3. But I said that 14, 15 were so big, I would wait for a second entry buy. You got a second entry buy, 23, but a doji bar, and it was all limit order buying. And I think most bulls were buying with limit orders, and they were hesitant to buy with the stop, especially above a small doji, 23. 24 outside down, 25 outside up, but it did not go above the 25 high to trigger the buy. We went again below the 25 low, reversed up 31, and then we had a higher low, a pullback from the reversal 33. I thought it was an okay buy for some kind of a test up, maybe to the open of the day. And we got a weak rally. And then through here, can the bears, let me go back to stop entries. That's not all that good. It's all limit order trading, all through here, limit order trading. Acceptable stop entries, I would not buy that. I would not buy that. I would not take any of these sells because the limit order bulls are making money, and we're probably not going much below yesterday's close before we get a swing up. I think, maybe below 27, but I would not do that, for a failed breakout bear trap. And then above 33, not great, but I took it. And then we have an IOI here, probably going up a little bit. FOMC, really not good stop entry trading, selling below bull bar 61, 63, 56. I would not do it. And then the next stop entry buy, I thought was 65, and then again 70 and 76. Even though I thought it would fall for a point or two, I thought it would fall for 2 points. I would not take it because the risk is too big and the probability probably not high enough to offset the risk. Buy the close, sell the close. Maybe, can you argue, is it buy the close 9, 10? It might be, but we have these big bear bars, and this is probably a limit order breakout mode open. And if it is, then by the time it looks bullish, you're probably near the top and about to reverse down. By the time it looks bearish, you're probably near the bottom and you're going to reverse up. So bar 7, not good, sell the close. Bar 10, not good, buy the close. 17 was a surprise, but terrible follow through. 15 was a surprise, but terrible follow through. And it looked like a limit order sell off here. It was never really good buy the close or sell the close until maybe 71, 72, 73, 74. Even 75 is still buy the close. Disappointment, 76, you buy more lower, and then you get out, and it comes back to the 75 close at the end of the day. Easier said than done. Normally, if you get buy the close at the end of the day, and you got 5 or 6 bars, I stop buying by the usually 4th or 5th bar, because too much risk of a big reversal at the end of the day. Limit order trading, all limit order trading. You could buy the too low, but I said that we were at resistance and I would rather buy lower. 5 high, probably sellers above. 8 high, not a good looking buy, probably sellers above, but it's a high 2 at the moving average, opening reversal, a higher low, a 50% pullback. Not a great limit order trade. The 11 low, we have a double top bear flag, a trading range open. I don't want to be buying that high. And the 13 high, I'm not going to be selling above a pretty good bull bar. 16 high, we have a wedge opening reversal, not a good sell. And then we got limit order buys below 16, 17, 18, 19, 20, 21. Everything was a limit order buy. And on the way up, everything was a limit order sell. Above 26, above 36, above 37, above 43. And I would not be trading with limit orders on the FOMC report, but the bears who sold made money. And then here, 62 high was probably a limit order sell because it's a bad buy. And then the bears kept the gap open, 62 low, 66 high. But I think we're going to go up, and I think as long as the market does not hit the stop below 65, there are probably buyers below 66 and 69, and we went up at the end of the day. Question. Okay, is it a realistic goal to make profit every day if only taking swing trades? No. Okay, more to the question. I've been practicing for more than a year. spending more than 7 hours a day trying to address many problems and mistakes, but I'm still losing and getting frustrated. A swing trader is not going to make money every day. All right? He cannot. And that's because most of his trades are going to be 40% probability. And if you swing trading, he may only take 1 or 2 or 3 trades a day. If he has a 40% chance of making money, he has a 60% chance of not making money. So he's not going to make money every day. So he's not going to, it's not going to happen. However, if you're really selective about your swing trades, you can take higher probability swing trades. Higher probability, buying above 33 was higher probability with low risk, but I ended up scalping out with 2 points. And then buying above 65, higher probability, risk not all that big, but you want reward at least twice your risk, which you got. It went up more than twice the risk. And this is my favorite type of trade, but I was already long. A buy the close breakout on 72, 73, I was taking profits. But a swing trader who bought that 72 close, his goal would be at least a measure move up based upon the open of the breakout to the close of that bar, which is up here. And he could buy this close and same thing. The goal would be a measure move up from the open of the breakout to the close of the breakout. The problem with these is you think, oh my God, the market's collapsing. It's going to go down forever. It's hard to now think, oh, it's not going down. It's reversing up. That's what makes it hard. It's hard to change your psychology. But that's the kind of trade that if you're able to look for these trades, once you see 3 bull bars, especially strong ones, bodies getting bigger, you just buy the market. Don't even try to buy the close. You see the close of 72, do not place a limit order to buy the close of 72. Right when 72 closes or a second or two before it closes, you just hit buy the market. And if you do that, you'll discover that all of a sudden you're making money. You buy the close, put a stop below here or below here, and hold for a measure move up or hold for 4 points. And every day there's something like that. Here, same thing. If you buy the close 12 or 13, and you put a stop down here, hold for a measure move up, you got to get out either below 19 or 22, but you're only losing a point or 2. Here, sell the close, and you would have made 4 points. Here, sell the close here, and then buy here, and you would have made at least 4 points. And then here, not so easy. That's buy the close breakout. And if you're swing trading, there was no reason to get out. You'd make a whole bunch of points. Here, the swing trade either above here, better above here, and you certainly would make more than 4 points. Here's another one of those reversals. You buy that close and you try to make 4 points. These days are so big, you can make 8 points instead of 4 points. Big surprise bar. Sell the close, put a stop above or above, and place a limit order to get out and measure move down and go to Walmart or go to the gym and come back in an hour or 2. So, so is it possible? Most days there are reasonable 4-point swings, but it's not like there are 10 of them. There might be 1 or 2 or 3. 90% of the days have at least 1 4-point swing with a reasonable stop entry, a good signal bar, and reasonable context. And that's 90% of the days. And most days have more. So I would just try to, patiently wait for the setups and then manage them correctly. So you either wait for good reversals or you wait for strong breakouts. That's probably the easiest 2 things to do. Okay, question. Armando, you mentioned using 1-minute bars to get earlier signs of buying at support levels. Usually wait for the close of the 1-minute bar, a buy signal, or you just look for buying signs. First of all, I don't trade the 1-minute chart very much, but when I do, a lot of times in a breakout like this, let me put up a 1-minute chart. Okay, in a breakout like this, when I'm looking to buy, I'll place a limit order to buy the low of the prior bar, especially if I have 3, 4, or 5 pretty good 1 minute bars. Just buy that low. I was already long, so I did not have to do that. And a lot of times, if it's 3 or 4 bull bars and the context is good, I'll simply buy the market on the close of the bar. Back to the 5-minute chart. So if I'm looking for an early entry in the 1-minute chart, what I'm saying is I'm trading the 5-minute chart. I'm not trading the 1-minute chart. I'm trading the 5-minute chart. And the 1-minute chart is just an early entry. And so I'm not paying a lot of attention to anything on the 1-minute chart other than a setup, a signal, like 3 or 4 consecutive bull closes if I'm looking to buy, the first pullback if I'm looking to buy. So I'm not looking for fancy patterns on the 1-minute chart. A lot of times I'll look at momentum. If I see a surprisingly big 1-minute bar, anytime I see surprisingly big 5-minute bar, surprisingly big 60-minute bar, I'm expecting follow through. But if it's a surprisingly big bull bar after the market's gone up a long time, I'm expecting a reversal. If I see a surprisingly big bear bar after the market has gone down a long time, I'm looking for a reversal up. So it's the same as trading the 5-minute chart, right? Very big bear bar, late in a bear trend, parabolic wedge, I'm looking for a reversal up. You can trade these identical patterns on the 1-minute chart. However, you have to be very quick at assessing the market. Is the probability good? Where's the risk? What's the reward? For years, I traded the 1-minute chart, the 2-minute chart, the 3-minute chart, and then tick charts like 1,000 ticks, 3,000 ticks, 5,000 ticks. But now that I'm older and a little bit slower, I prefer trading the 5-minute chart. I think it's very hard for a person to make money on the 1-minute chart unless they're a really, really good scalper. However, a really good scalper can make an incredible amount of money on the 1-minute chart. He can also make an incredible amount of money on the 5-minute chart. Back to the question. I bought above bar 13 with a stop below 8 and immediately reversed down. Where should I have gotten out of the trade or just rely on the stop? Whenever I use a stop that's fairly wide, and that is fairly wide in terms of points, I never want the stop to get hit. And but there's one thing I also always do on every trade. I always wonder what it would look like if I'm wrong. So I don't simply take a buy above 13 and assume it's going up. I also take that buy above 13 and imagine what would make me change my mind. And 14 would make me change my mind. So if I bought the 13 high and I see that terrible entry bar and I know we're in a trading range open and that means there's a magnet at the 8 low, I'm going to get out below 14 because we could get down to the 8 low. I said on the open that it was a trading range open. I think on bar 2 or bar 3, I said it was a trading range open. And trading range open means you want to buy low, sell high, and scalp, not buy high and use a stop at below the bottom, not sell low and use a stop above the top. You can only buy high if you can scale in lower and use a wide stop and tolerate a big open loss. And you can only sell low if you can use a wide stop, scale in, and tolerate a big open loss. Because trading range open, that means if there's a strong sell-off, it's probably a bear leg in a trading range, and we're going to get a big reversal up above the middle of the range. If there's a strong rally, it's probably a bull leg in the trading range, and we're probably going to get a pullback to the middle of the range, maybe to the bottom of the range. 13, I was tempted to take the buy, but I was concerned that it was the middle of a trading range, and I would rather wait to see a strong breakout and then buy higher than take the 13, the low risk trade, buying above 13, stop below 13, or stop below 8. I would rather wait for the higher probability trade, even though it would have higher risk. Question: do you ever scalp and scale in the forex markets, even if the range is around 20 pips? Usually, if the range, nowadays I trade the E-mini I look at the forex market and the bond market every day for trades, and sometimes even the crude oil market, rarely gold. However, whenever the market is only 20 pips tall, I usually will not trade the forex market. If it's 20 pips, if there's a 20 pip tall range and the market's in a huge bull trend on the 60-minute chart, I might buy for a swing up. But in general, if my minimum range for trading the forex market is 30 pips, and if the range is 20 pips, 25 pips, I usually will not trade because it's too difficult to make money. I'd rather take trades where I can make more than 10 pips, because forex markets, a lot of times most of the time I'm entering with limit orders and exiting with limit orders. And if the range is 20 pips tall, it's just really, really hard to do anything. Let me put up. So here's the euro versus the dollar, and this is the day session. Range, I don't have the scaling on the right. I have the scaling set up for the E-mini. But this is a surprise bar, probably going a little bit lower. And once it starts doing this, once you start to get bars that are 3 pips tall, 5 pips tall, prominent tails, small bodies, and sideways, I stop trading. If I were trading overnight and I saw this, this is probably big up, big down, 2 legs down. I probably would not buy that, but I probably would look to buy a reversal up. We're above the bottom of this, we're above the bottom of that. So, and there's room up there for a 10 pip scalp. Bull flag, probably buy here, looking for 10 pips up. But one of my basic rules in forex trading is if the range is less than 30 pips, I usually don't trade. If the range is 20 pips, I would only trade in in really unusual circumstances. For example, if the 20 pip range was a bull flag or a bear flag in a very strong trend. All right, so if you've only been trading for a year, you're in for a shock starting in February, because the market is going to become increasingly different, increasingly volatile over the next month or two, possibly for the rest of the year. No more of this stuff. This is going to end, and we'll start doing this stuff. My guess is on Fast Money on TV today, they'll talk about the great reversal up, and that the bull trend is resuming, and it might be, but I think that the buy climaxes are so extreme that, and then we have a decent enough reversal that in general, when you have a head and shoulders top, left shoulder head, right shoulder, you have a 40% chance of a swing down. And at the moment, we have a 40% chance of a swing down. If we get the lower high, 40% chance of a swing down. However, if the risk is small, the reward is huge, it's certainly worth buying puts or put spreads on rallies, because if the reward is 3, 4, 5 times the risk, even if the probability is 40%, that's still a solid trade. Okay, hope everybody has a good night.